Introduce and share a little recap from yesterday's event. So ladies and gentlemen, welcome back to day 2 of the Silver Jubilee 25th Global Conference of Actuaries here at the Geo World Convention Center, Mumbai. Well, let me just ask you all one very important thing. I hope you all had rest, a good amount of rest yesterday evening. Did you all? Yes? Okay. Well, there was a wonderful time to network with people, have some wonderful conversations. And ladies and gentlemen, let me ask you all that once again, please keep your mobile phones on silent mode to avoid any interruptions while the event is taking place. Thank you so much for your humble cooperation on that. Well, we are looking forward to a power-packed day 2 ahead of us with deep dives into digital trust, collaborative nation building, regulation, term assurance, health risks, and the future of risk ecosystem. Once again, I thank each and everyone who's present over here today as we officially begin day 2. Here's a beautiful recap of day 1 that has been showcased on the big screen. We had fantastic speakers, distinguished leaders, our chief guest, Mr. Shetty, who graced the event, our President Ma'am, Vice President Sir. We had ACFA as well. There were so many awards that were being distributed yesterday, so many associates, so many moments to cherish, so many learnings. And ladies and gentlemen, today we are here at day 2. Yesterday on day 1, we spoke a lot about ensuring Bharat's heartland reinsurance as a strategic tool and transforming insurance and financial systems. If you think about it, everything is ultimately anchored in our theme, which is actuarial pathways to Viksit Bharat, managing risks for inclusive social and economic growth. Today, we build on that foundation and shift gears into several themes lined up your way, ranging from topics like digital trust and cyber actuarial linkages to regulations like IFRS 17 and RBC. So ladies and gentlemen, let me ask you all one more time. Are we ready to welcome day 2? Are we ready to welcome day 2? Come on, everybody. All right, well, ladies and gentlemen, we would like to showcase an AV wherein we have a very beautiful message by our chief guest. Due to an emergency commitment, our chief guest couldn't be present over here today, but he's left a beautiful video message for us. May I request you all to have your kind attention on the big screen behind me? And can we have the AV, please?
Distinguished dignitaries, esteemed members of the Institute of Actuaries of India, respected global actuarial leaders, industry experts, and participants from across the world. Good morning to all of you. It's a privilege to address distinguished gathering at the 25th Global Conference of Actuaries. I extend my sincere appreciation to the organizers for convening this conference that brings together global actuarial leaders, industry experts, and professionals to deliberate on the future of actuarial science and its growing importance in a rapidly evolving global environment. My heartiest congratulations for the Silver Jubilee celebrations to the Global Conference of Actuaries. The Global Conference of Actuaries has consistently served as an important platform for dialogue and collaboration among stakeholders in the financial services ecosystem. The theme of this conference, Actuarial Pathways to Viksit Bharat, Managing Risk for Inclusive Social and Economic Growth, is both timely and forward-looking. As India accelerates its ascent toward becoming a leading global power Systemic risk management is no longer a peripheral function, but a strategic imperative to insulate our economic expansion from emerging global shocks. India's aspiration of Viksit Bharat envisages a financial architecture that is resilient, inclusive, and forward-looking. As an emerging market economy, India must continuously manage credit risk, liquidity pressures, governance standards, and systemic interlinkages, particularly in an interconnected global financial system. The actual profession plays a vital role in identifying, quantifying, and mitigating these risks through structured risk assessment, enterprise-wide risk management, and forward-looking stress testing frameworks. Actual support in providing regulatory environment that promotes innovation while preserving prudential safeguards will be central to achieving Viksit Bharat objectives. In the current global environment marked by geopolitical tensions, supply chain disruptions, financial market volatility, and cross-border capital flow uncertainties, robust risk management assumes even greater importance. Actuarial expertise strengthens institutional preparedness against global shocks by enhancing capital resilience, scenario modeling, and long-term financial stability planning. India's economic prospects are favorable, supported by robust growth fundamentals, policy reforms, and expanding economic opportunities. The financial sector is expected to be a key contributor to this journey, supported by an enabling policy environment that encourages innovation and competition. The government's vision of insurance for all by 2047 aligns closely with the broader objective of building a developed and inclusive India. The objective of insurance for all must combine expansion with sustainability. Improving affordability, increasing awareness, and deepening penetration across rural and underserved regions are critical priorities. Sound pricing, capital discipline, and consumer-centric product design must go hand in hand with outreach initiatives to ensure that protection is both accessible and financially viable. Today's risk landscape is becoming increasingly complex. Climate change, agriculture exposure, and extreme weather events are intensifying catastrophe risk. Robust catastrophe modeling, climate risk assessment, and innovative risk transfer mechanisms, such as parametric insurance solutions, are essential to enhance disaster resilience, protect farmer incomes, and safeguard vulnerable populations. Actuaries are uniquely positioned to address these challenges through advanced risk analytics, predictive modeling, and robust capital management strategies. Technology is also reshaping the actual profession. As financial institutions increasingly deploy AI-driven models, responsible AI governance, transparency, and model validation, and ethical data usage frameworks become very critical. Actuarial discipline contributes significantly to model governance, validation standards, and accountability mechanisms. The role of actuaries today extends well beyond traditional applications. In banking, NBFCs, infrastructure financing, pension systems, and public sector institutions, actuarial expertise contributes to credit risk evaluation, asset liability management, capital optimization, and long-term sustainability analysis. In large-scale infrastructure projects and public finance, actuarial modeling supports viability assessment and long-term risk forecasting. On account of recent reforms, as financial services attract higher foreign direct investment and global participation, actuarial oversight becomes even more important in capital optimization strategies, risk diversification, and global reinsurance integration. The growth demand for actuarial expertise reflects expanding opportunities across financial services beyond insurance, pensions, investment management, and emerging insurtech ecosystems. As we look ahead, collaboration among global actuarial leaders, policymakers, and industry stakeholders will be essential in building resilient financial systems capable of addressing both local and global challenges. While we celebrate the Silver Jubilee, we must also confront a strategic reality. A Viksit Bharat requires a leap in scale that current actual pipeline is not yet equipped to handle. My challenge to the Institute and the global leaders present is twofold. First, decouple actuarial science from the narrow confines of traditional applications and extend it to our national infrastructure and climate goals. Secondly, accelerate the creation of talent. We cannot wait decades for a workforce we need today. The profession must evolve from being a gatekeeper of risk to an accelerator of certainty. A well-protected and financially secure India is fundamental to achieving long-term prosperity and stability. By working together towards meeting the demands of a $30 trillion economy, we need to expand coverage, foster innovation, and strengthen risk management, and build a future every citizen has access to financial protection and the confidence to pursue opportunity without fear of unforeseen risk. We must leverage our digital public infrastructure to build indigenous catastrophe and credit models. India should become the global hub for actual R&D, providing risk transfer solutions tailored for emerging markets across the globe. I urge you to keep these goals in mind and congratulate you once again on the Silver Jubilee of the Global Conference of Actuaries. My best wishes for fruitful deliberations and meaningful outcomes, and I thank all of you for giving me very patient hearing. Thank you so much.
We are truly honored to hear the insights and thoughts of our chief guest, Shri M. Nagaraju sir. Ladies and gentlemen, on this note, allow me to introduce the very first panel discussion of the day, but in continuation to day one, it's the fourth panel that we are looking forward to. The topic of this panel that we look forward to is Digital Trust 360, integrating cyber defense and AI intelligence in actuarial science. A little more in-depth detail before we begin the panel. Our work becomes more data-driven and interconnected. Digital trust is no longer optional. It is fundamental. This panel explores how cyber defense, AI, and actuarial science come together to manage risk in a digital-first world. Ladies and gentlemen, with a lot of energy and enthusiasm, please join me in welcoming Ms. Asha Murali, Honorary Secretary and Council Member, Institute of Actuaries of India. Very, very warm welcome to you. Ladies and gentlemen, Ms. Asha Murali is going to be the moderator for our panel discussion today. Joining her are the panel members. Allow me to introduce our first panel member, Mr. Chandra Reddy, Head of Client Digital and Data Solutions, Asia Pacific, RGA India. Very, very warm welcome to you. Ms. Asha, please take a seat. A very warm welcome to you. Welcoming Mr. Chandra Reddy. Our second panel member for today is Mr. Subrajit Mukhopadhyay, Deputy CEO and Executive Director, Edelweiss Life Insurance Company Limited, India. Very warm welcome to you. Joining them in this panel, Mr. Ramanpreet Kaur, Consultant, Tata Consultancy Services, India. Very, very warm welcome. As all our panel members, our esteemed moderator, have taken a seat on the dais, ladies and gentlemen, we look forward to getting an in-depth information insights on Digital Trust 360, integrating cyber defense and AI intelligence in actuarial science. Over to you, Ms. Asha. Thank you.
Good morning, everyone. We had a highly engaging first day of discussion, a lot of takeaways. We had some inspirational messages from people. Dr. Devi Shetty's was particularly inspirational. And then, of course, we had the message from the Prime Minister, which again is giving us a lot of impetus to go forward. And just now we heard the Secretary DFS talk to us. And I think the expectations of the profession are very high, and the bar is getting set very, very high for us. So looking forward to another day of interesting discussions. See, we have been talking about artificial intelligence for quite a number of years now, 5 to 6 years, but it still seemed a bit distant. Now it seems to be in your face. The productivity gains and the efficiency which we can get from artificial intelligence seem to be very too good to be resisted anymore, correct? As and when we are speaking, there's a lot of pressure in all industries to adopt AI. So there's a conference which is going on next door where they're talking about artificial intelligence in agriculture. And insurance industry is particularly data-driven and therefore seems ripe for the use of AI. But it's not an easy decision, correct? We are a regulated industry. There's a lot of compliance. And we're also an old industry, and therefore we have a lot of legacy systems. And whatever decisions we take, correct, they will have a significant outcome on the customer. So given where we are today, we are going to be exploring how should we evaluate use of artificial intelligence in the insurance sector. What are the kind of questions which we should be asking? What is the leadership thinking? How should we look for return from whatever initiatives which we take on terms of artificial intelligence? So there's a slight change. We are not going to be talking about cyber security. So it's going to be use of how we leverage artificial intelligence, what are the use cases, and how do we evaluate the ROI? So we are first going to start with Raman's presentation. She's going to be talking about using artificial intelligence in our actuarial models. I mean, so actuaries are core to the industry, and therefore we'll also be one of the prime candidates for using AI in actuarial models. So she's going to talk about actuarial models and use of artificial intelligence in actuarial models. And then we are going to start off a discussion with Subrajit and Chandra. So over to you, Raman.
Good morning, everyone. My name is Raman Preet, and I work with Tata Consultancy Services. Today, I am here to give you a glimpse of the paper that I have written. In that paper, I have introduced a practical AI-enabled risk intelligence framework. So, presentation, please. Yeah. So let me give you the brief that why this topic matters. We all know that India is going through a huge protection gap between what risk people are actually facing and what coverage insurance industries can provide. Along with that, climate risk is no more a distant event. It is actually there and already started impacting our mortality, morbidity, and health outcomes as well. In the past, extreme events like heat waves or floods, they used to be the isolated events. But now, as risks are evolving, climate is changing, these risks are actually started interacting with each other. They are becoming dynamic. And our traditional models are not yet prepared to include those impacts. So that's where we really need to enhance our analytics, and we need AI-enabled systems so that we can accommodate those risks. And that's where this framework comes into the picture. So you can see there's a first layer, data layer. And actuarial, everything starts with the data. So if we say that we will get the data from various weather sites, because that is possible. So once we get the data, as per this layer, AI will make it organize, AI will prepare it and organize it in a way that we can use it for the further analysis. Over here, I have taken the example of an extreme event, heat wave. So what if we get the data of temperature, pressure, humidity, and it will get calculated with the predefined formula. For example, WBGT that I have taken over here, wet bulb global temperature, that is the indicator of heat wave. So if that is also get calculated, we'll get the information about outdoor exposure risk, urban heat intensity. So in this layer, data, we will understand that what kind of data we have. We'll try to understand the data. Once we get that, now the next thing is that what insights or what information we can have that from the data. That's where our second layer comes, AI modeling layer. In this layer, with the use of machine learning and statistical tools, we can actually identify the patterns. And the broader AI will actually interpret that pattern as a risk in the risk intelligence information. So, for example, if we talk about heat wave only, so if we get that, okay, there is a temperature increase, WBGT is going to be greater than 30 degrees for consecutive 5 days, what AI will do, it will start looking in the other similar pattern like hospitalization has been increased by, maybe after 7 days of this heat wave event. So AI can actually correlate the two things and give us the information about it. That's where this layer works. And then, once we get the information that what this data is speaking about, the next thing will be that what to do with that data. Information is there, but what should be done? And then there comes the third layer, which is actuarial application layer. So we can get information or suggestions, like there is an heat wave, we should be uplifting our assumptions. There are insights that we are getting which needs to be directly feed into the pricing reserving models. For example, what if I'm putting the data into the system and system is looking into the pattern and then it is telling me that we suggest there needs to be increase in the mortality by 5%. And then, once we understand what to do, the last layer will come, which will tell us how to do that. That is where integration and deployment will come into the picture. Whatever information we will get from actuarial application layer, we can actually integrate that in our business models. We can create dashboards, we can create automated data pipelines so that data can flow through. So again, in the previous example, as I said, that AI can give us the information, suggestions basically, that mortality needs to be increased by 5%. We can say that it is, once we will increase that, it will impact our results, which are outside the threshold of the particular geography. So that will give us the end-to-end relation between data to the result. That is in the business action. And then the last layer, actually not last, governance and ethical oversight layer. That is one of the important layer. And you can see it is not the one layer. It should be actually embedded in each and every layer. We need to look into the explainability, documentation, fairness, and human sign-off. Each layer has to have explainability tools that are going to be there to explain the reasons. And each layer has to be validated by human sign-off. So as per this framework, We can say that AI can detect complex, non-linear relationships between the various impacts that we have. And then it can actually enables granular segmentation and early risk signals. Currently, as we are looking into the signals as an annual event, we will get the claim data and then we will look into it. We can actually use AI and keep the regular monitoring. It enhances pricing, underwriting, reserving decision because we will get early risk signals. We can actually look into the assumptions beforehand. We can do stress testing. And hence, it is not going to replace. It is going to support our decision making. It can enhance our decision making. Because in today's world, it is not the question that risk is there or not. It is more about whether our models can evolve as fast as risk is evolving. In this dynamic or interacting risk environment, if we can integrate AI into our models, that is actually going to bridge the protection gap that we have in India and help us to support a sustainable insurance system for the Viksit Bharat. Thank you.
Thanks, Raman. That was really very insightful. I think most of the time actuaries spend a lot of time explaining the results, and if AI can somehow help, that's certainly something which we should be looking at as a use case. Now let's start off more from a business point of view, an insurance business point of view. And like I said in my opening remarks, AI is something which is staring in the face, and there's a lot of pressure for all of us to adopt AI because it promises so much of efficiency and productivity. I would like Subrajit to set some context to where the insurance industry is now in terms of, what are the challenges, and therefore what could be the, how should we evaluate AI? Because if it's going to promise efficiency and improvement in profitability, but it's also going to come at a cost, So how should we evaluate AI as an insurance industry, particularly in the Indian insurance context?
Yeah, thank you, Asha. Good morning, everyone. I think it's a very interesting question to begin with, and some of the grapples that we always have at our board meetings, at our management level, and even at a very ground level as well. We are, so far, our adoption to the AI, especially the GenAI portion of the last couple of years, has been more to do with the POCs and pilots as such. But that's more of a bottom-up approach. But we see a lot of top-down strategy that can also be played out. And one of the key aspects of this is to really understand some of the cultural aspects. So as an actuary, we are very comfortable with a probabilistic outcome, but in reality, people have so far lived in a very deterministic approach. We had always a rule-based outcome. Even our technology advancement so far has been based on a very deterministic options. It's like what they call an if and then approach. Suddenly you are moving from a deterministic to a probabilistic approach where there are hallucinations, there are incorrect answers, there are not necessarily authentic response, and especially with respect to compliance where the boundaries are very clear, you cannot have a very answer which you cannot rely 100% on that. So, first your management and the board needs to understand for a decision-making purpose that one needs to be complacent with a probabilistic outcome also. If it is and the benchmark can be set aside, and they can put a particular number and they can accept that possibility. While for a compliance purpose, you may not be happy with a probabilistic response because there you need to be 100% sure on that. While on the risk side, you may have to think that, okay, am I comfortable with the tail risk or no? So I think there is significant cultural and cultural mindset shift that is required from that. And from an enterprise solution perspective, we always see, uh, as I say, so far our many adaptation of, especially on the insurance industry, has been through a POC driven, through a AI tools driven, or some of the cases ML, machine learning driven. Should we continue to focus on a very isolated, fragmented use of AI, which is tool-driven, or should we look at enterprise-wide solutions? The enterprise, because the real benefit of the insurance company will come into play only if we look at enterprise solution starting from a onboarding to the claims management, the entire life cycle management. However, currently, that is a huge legacy system and legacy system inapplicable. I was hearing someday you can write a greenfield AI code and actually create an website in less than half an hour, but applying some of this AI intervention and at a legacy system with a siloized data and integration challenges is extremely difficult and complex. And it's not easy to actually discard all this investment that has happened in the AI legacy system and come to a position. So the challenge is that you need to, what is the process? How do you go? One of the easy and lazy process could be just to go keep on doing the POC. And one of the reports I was reading, that 60% POC never see the day of the light. And that's what I call a pilot trap. It's actually trapped in the pilot. How do you get over this? Many of the organizations are now also feeling that you need to build a strong trust quotient with the AI. The organization having a high level of trust and trust within the ecosystem are able to come across an entire AI program across verticals and lead it from the top so that end-to-end things can be taken care of. You create a data repository, data warehouse, data platform at one side, and all the possible workflow are being run by some kind of an agentic approach. This requires a lot of significant management support and trust, lot of conviction at the management level, and then a lot of patience and conviction, and allow the slow and steady emerges. Insurance company, especially life insurance company, we are here for a long haul. And every stakeholders, whether it's a policyholder, shareholder, employee, regulators, even the distributors, all the stakeholders benefit from a long run of the aspect, because that's where the entire industry comes to a play. I think for us, it's important to look at AI and a long adaptation approach. Singularity is far away. We should steal AI as a scaffolding to the human mind and ensure that we keep on investing by looking at a long haul approach. And that's where the top-down approach will make much more sense than the bottom-up approach. Of course, we should do the bottom-up automation of multiple things, but I think there needs to relook at a top-down approach and look at the architecture in totality and create an orchestration around this architecture itself.
Yeah, thanks, Subhajit. I think these are not easy decisions, correct? Like saying that I'm going to scrap the existing, I don't know, maybe have a budget of 100 crores for like exploring AI. Anyway, I think we'll also have to talk about the decision making. You talked about how agents can decide. So I think the decision is also something which we'll have to talk about. But before we get into those aspects, I would like Chandra to step in. I know you've worked on claims especially. So there is a use case here on how AI has been adopted for claim. And he comes from a reinsurance perspective, but I think he can also throw in some aspects of how a direct insurer could benefit by using AI in the claim process. So over to you, Chandra.
Well, first of all, thank you for having me here. Claims is an interesting topic because it's the cornerstone of this industry. I think it's the moment of truth when the industry would be fulfilling the promise of paying what we're actually covering. So from a consumer perspective, it's very, very sensitive. It's very important. So be it a PNC product or be it a life or health insurance product, I think there's a lot of opportunity to transform by leveraging AI. So when you look at the current process, I think the claims process, it starts with a first notification of loss. Then there's a lot of data that's submitted as part of claims evidence. Then there is the adjudication process, the assessment, fraud checks and other things. Finally, the payment is made. And then what happens between that point to the point the payment is made is the elapsed time. So from a consumer experience perspective, there's a huge opportunity to change that, starting from the first notification of loss. So one interesting example that comes to my mind was this company called Lemonade, I think, which was one of the pioneers of leveraging artificial intelligence. They support, primarily they started off as a renter's insurance in the US, and now they expanded into multiple products. But basically they have an app, and it's a very simple step. All they do, they say is, open the app, clicks the claims button, and then they just tell about what happened. And then there is AI that actually runs a bunch of algorithms behind the scenes, including fraud detection and other things. And then finally a decision is actually made. So what they've really done is transform that whole claims experience. And the fastest they've ever recorded was, I think they might still be holding the record of that. It was from the point a claim was submitted to the point the claim was paid out, it was done in about three seconds. That's incredible, right? So when you look at even the whole process, now AI can transform the experience in the way claim can be submitted. In the past, it used to be just filling up a lot of paper-based forms or digital forms, but now it can be done in the form of video submissions. It could be done in the form of pictures. Like if there was a car accident and then our car got damaged, but if there was the ability to take a contextual video around that point in time, and then it really helps the claims adjudicators to actually have the right information to adjudicate that claim. And AI can also help with the adjudication process to kind of like quantify what might be the appropriate claim amount. So this is where I think there's a key role for that to play. And then the fraud part. So to go and do checks manually across different dimensions, I think that actually takes a lot of time. But if you leveraged the fraud detection capabilities, I think that part also could be automated and then kind of like improves the whole consumer experience. So yeah, in a nutshell, yes, AI has got plenty of roles to play in that whole claims process.
Yeah, and also I think on the life insurance side, we have a lot of complicated products, and we also have like different versions of the product. Every day, I think we are, every month we launch a new version of the product with a slight difference in benefit. So I think those, so we are operating with PDFs and paying while life insurance should be much more straightforward in terms of what we pay, but I think there's a lot of load in terms of how we set it up in the POL admin system. So you think, Subhajit, any use case there that we can think of, from life insurance side? One is like, how do we speeden up the claims, like your term insurance kind of products? And even on the savings products, is there any benefit which we see?
You are asking from the claim point of
Yes,
view or any other point of view?
Claim point of view, we can
Claim
start
point of view, I think it is because one of the things in the life insurance is that mostly the savings product, it's the asymmetry of the payoff is 1:10. Whereas in the term insurance, it is 1:500, 700 like that. So when your benefit versus risk is 1:10, most of the claim management I see should be very automated. And I think there are a few companies or organizations already giving a 24 hours claim. Many, at least in our organization, we have moved to a 40% claims are being paid in the first 24 hours itself. And we see for a savings case, we see that going very high level with the uses of AI. But there are other use cases of AI also in like distributions and other places.
Yeah, we'll come to, I think the claim is something which Chandra has worked on, and I thought, so any other, in terms of like paying the right claims, how do we measure that we are paying the right claims? So we had a process till now, correct? And now we are going to introduce some of these AI tools, and the claim process is going to be faster probably, more efficient. But how do we make sure that we are more efficient? How do we measure that? Is there something that we can think of? I mean, we may be paying faster, but we may be paying more claims, or we may be denying claims. And who is the responsibility of the decision? Is it still with the human? Or is it we go to rely entirely on AIs? I mean, feel free to, these are all like initial, I think, initial
Absolutely.
days.
So I think, where a judgment made by an AI gets questioned is when a consumer is actually at loss, right? This is where I think it just gets the negative attention, right? So I think the right approach might be like, AI, you start off by taking care of what we call, you could potentially call noise or the low value claims, where there is not much resistance or there is not much question or ambiguity in how the decision was actually made. But when it comes to complex cases or when there are some ethical considerations to be involved, then AI does not have that capability today. So this is where I think a human needs to kind of like intervene. One interesting thing, I think this came up in my initial years working with underwriters. One of the things they would tell is, it wouldn't take them much time to actually make a decision, but then a lot of time is spent on finding the information that they need to make that decision. So I'm assuming it's the same thing for claims too. So when you are adjudicating a claim, it's about finding what is it that would prevent us from paying the claim. So if we had access to that information, then I think the claims adjudication process would be very, very fast. So I think the role of AI would be to kind of like, perhaps to start with, bringing that information to the surface where a human can actually look at from an ethical perspective, from also from the appropriateness perspective, and then make a decision.
So you're saying it should still be the human who is making the decision. I think at least for some time it is going to be the human who is going to make the decision. And probably we should be looking at these tools as something will help the human to make the decision. So you talked about underwriting, and Subrajit, I know, especially in the life insurance industry, like we have been trying to squeeze the time which is needed for underwriting, especially for protection. Correct? There's a lot of documentation which is required, and we still haven't reached the aspirational level as to a customer gives whatever is required, or we as an insurance company are able to articulate what is the requirement and the customer is able to submit all of those requirements easily and a policy gets issued. So do you see any benefits of AI in underwriting? And would you sponsor such a project? In your, just a free, I mean, again, what do you think?
Yes, I do. At the same time, it's not going to be easy. I just say that in a typical term insurance, the probability, the payoff versus the premium is almost 1:500 to 1,000. It's a very minuscule probability. Any analysis done on a very minuscule probability is prone to error. So even with the advanced AI, because it cuts in so many segmentations and so many fineness is involved in the pricing, that a little change in the behavior, it will create a lot of problems. So I see this is progressing slowly, especially with respect to very personalized offering. Okay, one of the advantage of the using AI is that it can really create extremely curated and personalized offering to the customer, which I think should evolve. That should evolve, and I expect that over a period of time, that personalized offering should be a real game changer for the life insurance industry itself. At the same time, I don't see the underwriting, especially for the term underwriting, completely go fully AI. It should be hopefully with some manual supervision, but as long as my key point is not about the underwriting, the key point is that as long as we are able to offer an extremely curated and personalized offering based on the health and other demographic and other psychographic and demographic features of the potential customer, I think we'll be able to create a real customer delight for the customers.
So on the distribution, we want to touch on the distribution aspects. I mean, we are, like you did speak about it briefly, like we operate with different channels. Now, could AI do the selling, or is it going to help the distribution channels with the selling? How do you envisage this?
I think what we do with the distributors basically, especially in the life insurance where we operate, I think first is it helps us in reaching out. Secondly, it helps us in advising the client. And third is finally getting the conversion made. In case of a reaching out, I think the leads and the lead warming and lead filtering and lead management will be extremely useful with the help of AI. So I think currently we are flummoxed with thousands of leads and millions of leads. We don't know exactly how to do a very appropriate warming of the leads. So I think AI would do a really good job in doing that. So that will help to actually identify the right set of customers and figure out which customer to go. On the advisory piece, I suppose it will become the final, the life of the last mile salesman extremely easier, both in terms of training that has been given, the administrative work the last mile advisor is supposed to do, and creating an extremely curated and personalized sales proposition for the last mile salesman. So these are the few things that training, the proposition, all these things will be extremely useful, and we see a significant productivity from the last mile salesman in the distribution space. So these are some of the things I'm pretty excited about. At the end of the day, the conversion will happen. The trust of a human being still will be required, and the conversion will happen at a face-to-face basis. So I am still believe that face-to-face will continue to happen, but it will be strongly AI-enabled so that actually the life of the advisor becomes easy.
So we are, at least in the immediate future, not thinking of AI selling to my AI agent. That may not happen, I think. At least in the immediate future, we don't know what it's going to be like. So now, of course, there are a lot of use cases which we talked about. So as Indian insurance industry, so all of you can chip in here. So do we have the right talent, to scale AI responsibly? How should we think about it? Should we build in-house? Because we all own a lot of commercially sensitive data, correct? So is it right for us to build in-house? Do we have the talent, or do we get external help? So what are the thoughts around this?
Yeah, I can go first. Yeah. So now, when we talk about AI, I think it also means machine learning, right? We're getting machines to learn, and then the machines are actually helping us to make decisions or to actually find risk scores and other things. So the most important building block of any machine learning model or AI is the data itself. So when we talk about a model is performing good or bad, or whether it's biased or it's drifting and other things, it's all based on the data. So, when we talk about building or buying AI models, it's about if we had data that is exclusive, that's unique, then it makes sense to build models. But if there are commercially available models like the commodity products like the OCR or the data digitization, or even products like that could read, the chest X-rays or the ECGs, or in a PNC world, it might be, the pictures that might get uploaded as part of the claims process, et cetera, et cetera. So there are some commodity-based products, and these products, I think, it doesn't make sense to build them. It makes sense to actually buy them, and then put them into the process in such a way where you just integrate the capabilities, and then so that you can actually create that seamless journey that you want to deliver as a business outcome.
Rajit, any thoughts?
Yeah, I think we are a little far away from the singularity, so we have to depend on humans only to get the best out of the AI. And I think that's the reason, as an organization, all the organizations should be harnessing the employees and the resources as best as they could. Clearly, I see a cultural shift to that extent. Okay, one of my realization over the period is that we are actually moving from, it's not a moving from knowledge to critical thinking to curiosity and creativity. I think it's a layered approach: knowledge, critical thinking, curiosity, and creativity. And as an organization, with this AI coming into play, especially with it used to be only a knowledge era up to a certain time. With the internet coming in, the knowledge become more and more democratized, and critical thinking started playing an important role. With the AI coming into play, some of the critical thinking element will be taken by the AI also. And then there, I suppose we need to be more curious and creative in order to use AI and survive in the age of AI as well. The organization should be investing on some of the behavioral traits, not the hard, because we all know that there will be some users of data scientists and other AI persons who will be doing that core AI, but as an organization as a whole should be investing more on softer aspect like curiosity, agility, collaborations, working in multiple departments, working as a team, and such softer aspect will actually help not only the employees, but the organization also to use AI more effectively, because there are some of the traditional aspects that we have been doing will no longer be there. So some of these aspects like curiosity, innovation, creativity, agility, collaborations will help us to actually use AI better and grow within the organization. So some of the steps that we think should be our people's strategy.
So any thoughts on how we should, I mean, let's say we do sponsor some AI project and I don't know, you spend some amount of money. So any obvious ways of measuring, how effective it is? Is it like claims ratio? Is it expense ratio? So hey, what are the KPIs which we can, let's say the board approved, you spend this much on AI and I put in this kind of efficiency. How do I measure that it's effective, that it's really giving me value for money? I mean, these are, like I said, these are all exploratory thoughts at this moment. I think we are still in the initial stages of actually implementing AI at a significant level. But these are questions which any providers of capital are going to be asking us, correct? So how do we measure?
Yeah, it's a very interesting question, right? So I think when you look at there are various ways of measuring it, right? So if you look at customer experience, then you could actually measure, it could be the time it takes to actually finish a process end to end. Then if you are looking from an internal efficiencies perspective, again, I think, the elapsed time could be a good measure, or the volume that you could actually complete could be a good measure. But I also wanted to kind of like, bring this perspective. A lot of times when we say about efficiency, I think there is a negative thought. It's all about, thinking about cost savings or limiting a certain, the capacity, right? But then when you apply to the context of like India, where you're actually looking at, X times growing, right? The 2047 vision, for example, there's a huge growth potential. So, but these capabilities are actually going to give us the additional capacity that we need, right, without adding too much from a resources perspective to process that kind of volumes. Because otherwise, if you said I want to do 5 times more business than what I'm doing today, then the one choice is actually you build 5 times more capacity, right, in terms of like human capital and processes and other things. Or the other way could be like you adopt technology and then use it as an enabler to actually get to the same point, but perhaps with a lot less cost. So if I had to simply put it, generating 10% savings versus supporting 20% growth, I think there are 2 different perspectives, and we'll have to take that into account when we do this ROI.
Very well said. So, Bijit, anything?
Yeah, I think it depends, and honestly speaking, it depends on how are you looking at it? A very long haul? Are you in for a long haul, or you wanted to do a short-term quick fix and something? There is a FOMO that you have to adopt AI, and there is a what we are doing. And as a result, as I say, 80% some of the AI GNA projects are not seen the day of the light. But having said that, you need to also be involved in the AI process as well. Unfortunately or fortunately, there is a lot of ambiguity. In today's world, although we love to seek clarity as a human being, there will be ambiguity inherent in the entire process. So as long as you are comfortable with the ambiguity, as long as you are comfortable with the discovering the new thing that is coming into play, I think our AI strategy will play along. We need to have a very calibrated approach. with patience as the key thing, key enabler, and looking, see how it is going to. Don't rush into something just because it's become a hype. But it's important. It's not a hype, it's real. Only you need to figure out from the wheat, from the chaff, and need to see what we need to invest, and a long-term outlook, a slightly longish term outlook would help in investing in AI, and I think ROI would be immense. But it's important to get some level of understanding. I will not say because as I say, it will be ambiguous. Some level of understanding, some level of triangulation to be done to understand what is in play, some level of visualization to see how do you going to invest. And that is going to be a grapple in all organization, all boards, all management. But I think as we go, as we triangulate more and more and start connecting the dots, we'll get some clarity in the picture, hopefully not full, if not full, yeah.
Raman, you want to add something?
I think we have sufficient talent in our teams and in India, right? The only thing is that we have to educate people more about how we can use AI in our day-to-day work to make our work easier. Once people will understand that, AI will automatically get integrated in various systems and people can use that rather than just getting scared from it and taking it as a software which needs to be learned. So that can make actually a difference in the learning.
So I think, so that's slightly different from the top-down approach which Subrajit said. So as people start using tools, they'll also start putting it in their day-to-day work.
Exactly.
Correct? And therefore, there could be some kind of efficiencies which will come up and maybe that can be scaled up. So
Right.
final thoughts on what's going to happen to actuaries? How should we kind of be equipped? Is this an opportunity for us to regain our title as the data scientists? So
Definitely, I think when you really look at, say, 50 years back when the actual profession existed. So back then, the tools that we had were mainly paper, perhaps calculators. And then came the technology, right? And we have a lot of, digital tools that were available at our disposal, and I think that actually enabled us to do things better. So I think it's just this journey of evolution that goes on. AI is another tool. I think it just gives us capabilities to handle, vast amounts of data that normally the current non-AI tools can't handle. So I would think, yes, the AI is just another toolkit that would be at the disposal of the actuarial, colleagues and, the actuaries. And it would just be another enabler to kind of like, navigate the challenges that we're going to see in the future.
I think as an actuary, we are in a great position to leverage AI because, as I said, the first tools are with us now, the knowledge and the critical thinking. I think we need to be more curious and more creative in our approach and use AI as a scaffolding and to grow and ensure we become part of the society to get a societal permission. So he said to get a permission from the society, social permission, so that we can work to use our actual resources for the greater good of the society.
I think we are running. Do we have time for questions of one or two?
One question for sure, ma'am.
Yeah, so any question? I think we can talk for the entire day, maybe one or two questions.
We'll pass on the mic. We request you to please keep the question brief as much as possible.
Thank you, panelists. Like, this was a good discussion around AI. And my question is on the slide that Raman showed, when AI machine learning is being done, and then on top of that, we are asking AI to provide the insight. Now, what are the guardrails placed there? Because for a given analysis that is performed by any conventional regression or even machine learning, AI can give you 5 answers to your 5 questions on the same data. And then which one is right? So what are the guardrails that you have planned around it so that you can trust? Because the whole theme here is digital trust, and are we able to trust that answer of AI? And which answer should be trusted, basically? So what are the plans there?
Yeah, thanks for getting with this question. So for each layer, as I already mentioned, that governance and ethical oversight has to be embedded at each step. So there comes the professional judgment. So whenever we get any results from the AI, there has to be a human professional who has to validate those assumptions, those results, as per the experience that they have. Because AI is still in the evolving stage. The more we will correct them, the more we will give them the right answer, next time there are chances that it will give us the more correct answer. So it's again a learning intelligence that is still evolving.
So we are talking here the calibration of AI upfront with the help of actuaries to make it perfect so that next time your answer is, as per what you are.
Right. So there has to be an actuary at every step. That's why I said in the end, it is not to replace the actuarial effort. It is more to add on the effort that basically reduce our effort in getting into the manual nitty-gritties that we might not be able to do manually. So AI can help us to do to go to such granular level.
Thank you.
So thanks for an interesting, I think we'll wind up now and the panelists will be available. I think you can interact with them during tea time. Thanks for a wonderful discussion. I think, I don't know whether these are early days because like 3 months back we were talking about something and now we are like, AI is progressing so fast. So of course we have to be prepared for it. And I think that's, it's very rare that we get an opportunity like this to be present when some transformative technology like this is available. So we have to ride the journey as it comes. And so as actuaries also, we should keep evolving. So thanks once again for an insightful discussion. Thank you.
Thank you. Thank you so much to all our esteemed panel members and our moderator. I request all of you to please take a step ahead of the tables, come together for a group photo op. And post that, we have a felicitation ceremony that shall be taking place. I hope the panel members had a great time. Ladies and gentlemen, please join me in thanking all our panel members. May I now request Ms. Asha Murali to please felicitate Mr. Chandra Reddy, our panel member, who shared his insights, and we thank you for joining us today and sharing your insights with us. Thank you so much, sir. It's time to put our hands together and thank our panel members individually. We shall now be felicitating Mr. Subhrajit Mukhopadhyay. Thank you so much for joining us in today's panel discussion and sharing your insights with us. I request Ms. Asha to please felicitate Mr. Subhrajit Mukhopadhyay. And now we have the honor to felicitate Ms. Ramanpreet Kaur. I request Ms. Asha to please felicitate Ms. Ramanpreet Kaur. Thank you so much, Ms. Ramanpreet, for joining us today and sharing your insights with us. Ms. Asha, we would be honored to felicitate you, and to do so, I request Mr. Ashish Ranjan, Council Member IAI, to please join us on stage and do the honors. Very warm welcome to you, Mr. Ashish. Ladies and gentlemen, please join me in thanking Ms. Asha for being such a fantastic moderator for us today. On this note, I would like to thank all our panel members. I would like to thank our moderator for sharing your insights. Thank you so much, Mr. Ashish, for joining us on stage. Ladies and gentlemen, I would like to remind you all that we request you to please fill up the feedback form, which is available on the application. So please do go on the application, fill up the form, and let us know your insights so we can understand how you have been taking up the 25th GCA event. Ladies and gentlemen, I would like to mention this, and we are absolutely delighted. We are grateful to Mr. Chong, who's present over here. He's a representative from Singapore Actuarial Society, and he's attending the event. Mr. Chong, can you please wave your hand so we know that you're present over here, and then we'll be very happy to see your presence. I'm certain he is in the exhibit area, but Mr. Chong is the representative from Singapore Actuarial Society, and he's attending the event today. We are extremely delighted by his presence. And now, ladies and gentlemen, it is time to move to a different segment of the day. So today is day 2. It looks like a full house to me. The ones who are sitting in the back rows, I request them to please come forward. If you were present yesterday, the ones who are sitting towards the last rows, I asked about it, that who all loved the idea or who all were the backbenchers in their school times or in their college times or whenever they were students. There was a huge roar in the audience that came. But I mentioned this, that even though we had the feeling and idea of being a backbencher, look at where we all are today. So big thunderous round of applause to all the actuaries, to the pride that you all carry, ladies and gentlemen. Please put your hands together for this moment. And on this note, इतनी तारीफ कर दी है अब backbenchers की, तो backbenchers थोड़ा 1-2 row आगे आ जाओ. Can you all please do that? Please do that, and please take a 2-3 rows step ahead, and let's break the ice over there. On this note, ladies and gentlemen, it is the segment of Roundtable that we are looking forward to. The topic that we are looking forward to is collaborative and multifaceted approach towards making India a developed nation by 2047. Before we take a deep dive into this particular topic of Roundtable, I request the people who are standing in the exhibit area towards the entrance, I request all of them to kindly come and take a seat. Please be a part of this discussion. It is rare to find such esteemed speakers coming on one platform, and we get the opportunity to hear from them. I'm sure we do not want to miss out on that. So I request you all to please come, take a seat, and be a part of this discussion. So the topic of the roundtable is collaborative and multifaceted approach towards making India a developed nation by 2047. This session brings together leaders from key professional bodies to discuss how interdisciplinary collaboration can support the vision of Viksit Bharat. Ladies and gentlemen, our session moderator, I would like to highlight a few hobbies that she has. She loves gardening, she likes painting, and she loves listening to music. And I would love to share the playlist that you have. Please put your hands together as we welcome President Institute of Actuaries of India, Ms. Preeti Chandrasekhar. A very warm welcome to you, ma'am. Joining her in this roundtable discussion is CA Charanjot Singh Nanda, immediate past President, the Institute of Chartered Accountants of India. A very, very warm welcome to you, sir. Please join me in welcoming our first panel member, ladies and gentlemen, along with Ms. Preeti Chandrasekhar. Please take a seat, ma'am. Welcoming our second panel member, CS Pawan G. Chandak, President, the Institute of Company Secretaries of India. Very, very warm welcome to you. As we are looking forward to a round table, we are truly honored to have our esteemed panel members along with us. I request Ms. Preeti to please felicitate our panel members. We shall be first felicitating CA Charanjot Singh Nanda, immediate past President, the Institute of Chartered Accountants of India. Sir, आपका बहुत-बहुत स्वागत है. I request you both to please step forward of the tables for a photo op. Zordar taaliyan ho jaye as we present a bouquet of fresh flowers and shawl to our panel member. now we look forward to felicitate CS Pawan G. Chandak, President, the Institute of Company Secretaries of India. आपका बहुत बहुत स्वागत है. Very warm welcome to you. I request Ms. Preeti Chandrasekhar to kindly felicitate our panel member, Mr. C.S. Pawan G. Chandak. We present a bouquet of fresh flowers and a shawl to keep you warm and remind you of our gratitude and this event. I request all three of you to kindly take a seat on the stage. We eagerly look forward to this discussion of roundtable. Over to you, Ms. Preeti. Thank you.
Thank you. Very good morning to all of you. And special thanks to both my panelists. And I think this is the first time that we are actually having a discussion with other big coveted professional bodies within India. And we've been talking a lot on Viksit Bharat, and that's a part of our theme. And collaboration obviously comes with it. You know, we can't have a Viksit Bharat, all of us trying to solve complex problems in the country without collaboration. And towards that, I just thought that, you know, when you talk of collaboration, it is not possible for us to do collaboration without credible institutions such as ours, the three of us. Because it's important that we give a holistic view to whatever decisions, whatever solutions we are offering to address the needs of the common man and other stakeholders for us to become a developed nation by 2047. And I said, as I said yesterday, today's progress should not become tomorrow's vulnerability, and hence it is important for us to get a holistic view. So, I will have the first question to both of you, and you can take turns in answering. From the government perspective, there are 4 pillars of Viksit Bharat. We talk of Yuva, that is the youth, Garib, that is the poor, Mahilai, that is the women, and Annadata, the farmer. For professional bodies such as ours, and I talk more from an IAI perspective, there are 4 things that it translates to. One is, and you can use the acronym ACTS. A stands for accountability and integrity. C stands for compliance in competitiveness. T stands for technology and transformation. And S stands for sustainability and stakeholder value. So how does this map to your profession, and what are some of the initiatives your institutes have taken you know, for us to contribute towards Viksit Bharat? Mr. Nanda, I'd request you to go first, please.
Thank you, madam, for a very wonderful question. ICI, you all would know, was set up an act of parliament way back on 1st July 1949. When the most important document to the democracy, the constitution, was not promulgated. So 4 important pillars which you have said. First is Yuva, youth. For youth, we have scores of programs. We have been training students of ICI with artificial intelligence, because the moment I came, discussions were on artificial intelligence. We have a program called Arora. It is only for CS students to use artificial intelligence. We have training programs for them. We have technology sessions for them. Moving ahead, we empower them with knowledge on various issues, right from sustainability ESG to system audits, information system audits, to blockchains. The second facet is the Garib. When you speak about the Garib, the entire economy and the vision of Prime Minister Modi with Viksit Bharat 2047 converges into bringing prosperity. As ICI, we have been working so long. I'll tell you, we have an MOU with the C&AG office. We have certificate courses on Panchayati Raj and municipal accounting, where we train young accountants. And with coming of corporate Mitra, we have been working extensively on that. Moving ahead, every Friday we have close to 185 branches. Every Friday, 4 to 6, we have an MSME clinic at all our branches. That's once last Friday of the month. So all people who want any advice related to taxation, accounting, GST, even fundraising, we call the bank people also, the managers who could offer credit to them by way of MSME. And the last thing in this facet I would like to tell you is financial and tax literacy. We take it to doors of people who need it. I myself, as the vice president of the institute, spoke to drivers and told them how they have to conserve their capital, have the taxation knowledge and create wealth for times to come. The third facet is women. I don't know, the question suits me because I was the founder chairman 2013-2014 for Women Member Empowerment Committee. We have a Women Member Empowerment Committee which works incessantly to inculcate women after they go for a sabbatical. When woman wants to come back, we have a full started system to first of all train her on all the contemporary topics and then bring into the profession. And we have so many scores of CA firms who want to collaborate with them for small time works. We don't want them to come to office. They have small children to raise. They may have household works. So we give them part-time jobs so that they are in the profession. They understand everything and move ahead. And what was the fourth, madam? Fourth facet?
Annadata, farmers.
And Annadata for farmers. We have a cooperative society. I would like to tell you, we did a program recently in Taj, where Mr. Bhupender Yadav, the environment minister, came. In fact, Mr. Amit Shah had to come, but he had a very pending urgency, so he couldn't come. Mr. Bhupender Yadav spoke at length how cooperative has changed the world. So we have a specific committee designed to take care of cooperatives, take care of farming needs. And I want to tell you, on a personal note, AI is not only for professionals, for farmers. I belong to a farmer family. How much urea you have to put at which place, AI will tell you. If you have excess, that becomes poison. If you have less, the crop will not grow. So working on a very holistic proposition to create value and to ensure that the dream of the Prime Minister Modi, Viksit Bharat 2047, is realized. And we as an institute, along with our sister institutes, become a very important facet in realizing that dream.
Thanks a lot, sir. And I think we should hear for the ICI a big round of applause for all the grassroots level, initiatives that they have taken. And there's a lot for us to get inspired on and learn from you. On another note, you talked about AI and agriculture. Actually, just the next door, there is a conference happening on agriculture and AI. So
Great,
interesting.
great.
So, sir, over to you now.
Very apt question. Today, these four pillars, our Indian economy is very much dependent upon. It is not only youth, but also Mahila, the Garib, and also the farmers. So I'll start with the farmers because Indian economy is a farming economy first of all. And now it is gradually moving towards the industrialization and we are also having our space everywhere. So farming, the farmers are the backbone to this Indian economy. And when we say Indian economy, not only the Indian economy, but across the globe, farmers are the annadatas and various initiatives of government are being implemented by ICSI. Not only the producer companies, but also we are propagating that how the licenses should be obtained, the FSSI or all chemicals, the fertilizers, the pesticides. So we are providing all kind of licensing requirements, the audits and the check points so that they can have the correct farming aggregate and they can prosper and give us the organic food. Today in development, having a food habit is very important and having the right kind of food is very important. So we are also having various workshops at all levels wherein we train them that what is required or what is the requirement of the general population from your side, and the food we intake will actually make our body and mind work. So it is the basic work which the farmers are helping us, and institute is extending all the support to all the farming and agriculture industries. Second, I will say Mahila. Mahila, we don't call it only Mahila. we call it as a Mahila Shakti. Because no, it is not only every household, but in our profession, more than 60% new registrants are from women community. Then let's say if we compare it to the employment side of the profession, we are having 54% company secretaries as women company secretaries. If we treat, let's say, the practicing side of the profession, then we are having 43% of the practicing community from the women community. Friends, rightly pointed out by Nanda sir also, that all our institutes are called as sister institutes, and all the institutes are treating the women as sisters. Because what we think is, if the backbone of the house, if the backbone can become a backbone of the corporates and the corporate world, it can flourish like anything. Because many days jobs, many intellectual jobs, and the women who are leading from the front need the hand-holding first in the initial years. And after, let's say, sabbatical or anything, coming back to profession becomes important. And we as an institute are supporting our women friends, women Mata Bhagini, to come back to the profession after the sabbatical break. And we are having courses which are designed online, and those courses can be undertaken for relearning and unlearning, because ours is a dynamic profession. Every day SEBI, NSE, BSC companies are coming out with new circulars and updates, and being updated is very important. And if you take a sabbatical break or any break, it becomes very difficult for women to come back to the profession. So as an institute, we are doing that. Also, we are third, Garib. It is said that it is unprivileged, but in today's society, they are the most privileged people, because not only the government schemes, but the schemes of our institutes are also supporting them. Be it a far north, northeast, or the economically backward class, we have fee concession, merit cum award scheme, and various other schemes. We are also having various new initiatives for the northeastern states, for the far north states, and thereby making them in an inclusive way of growth for not only the institute, but also the India as a whole. And youth ke to kya kehne? Be it Swami Vivekanand, be it Sant Dhyaneshwar, all these people have written the scriptures which are guiding even today after 100 years, 200 years. And we are sitting in the land of Chhatrapati Shivaji Maharaj, who was the young leader who fought like anything for Swarajya. And this Yuva needs hand-holding. This Yuva needs the guidance to take our nation to the further and farther heights. Because the technology, we were discussing AI in the last session, and this AI can be interpreted, accommodated, and grasped more fast than than the generations of 50s and 60s than the young people. And the young people are not afraid of experimenting. They are full of energy, and this energy will take our nation to the greater heights. When we compare the youth population, it is India who is leading. And just because of this young population, we are growing. And I think Viksit Bharat needs these four pillars: youth, farmers, Mahila Shakti, and Garib. So these are the basic things, definitely backed by the technology, by the professional intelligence of the sister institutes, and various government policies and processes. I am sure India would be Viksit by 2047. Thank you.
Thanks a lot, sir. A big round of applause for their institute also. On another note, you talked about sister institutes. I would, on a lighter note, say that maybe we are a cousin sister right now, but we would love to be an integral part of what your organizations do, so that collectively we go ahead and, position ourselves as professionals who can make a difference to the society.
Sir, thank you.
Hello, good afternoon, and welcome all of you to this session. The topic is term assurance and how this can be one of the many pillars in making our country the Viksit Bharat. So this is on something we are going to discuss, particularly the way forward. We will focus more on the way forward. We have got three distinguished panelists, and probably I would say that if you look at on the term assurance, so they are dealing the maximum volume, facing number of issues day in, day out, and growing their businesses successfully. The term assurance, if someone doesn't know, is a pure protection product where you keep on paying premiums, and upon death, either full sum assured or pay or through either lump sum or through income or in some other form, the sum is payable upon death to the nominee which you have nominated. Now, this line of business is quite important in filling the protection gap, because this is a long-term business, and there are many other forms are also protection businesses, but probably this is the more sustainable long-term product, and each and every one of us should have. Now, most of us know that our country is basically having a big amount of protection gap. And when this industry got privatized, huge gap was there. Even we are trying to solve the problems, but the gap is increasing only, not reducing. Because we are a young country, many people join the workforce, there is a requirement of protection. So the need is much more than the supply. Though we are growing like 30% plus in terms of the sum assured, the industry, the growth has been witnessing. Recently, we have seen that, and we have seen the successes. We have also seen that after removal of GST, we have now moved to one gear up, that growth has increased further. But still there are some companies, or there are many life insurance companies which are still struggling to generate the meaningful volume. Since we have the opportunity to discuss with those who are basically the top three life reinsurers in terms of volume of term assurance business. So what has been working for them growing faster, so that the delegates get the benefit of their insights, experiences, what mistakes they have done, कितने बार गिरे और उसके बाद कितने बार उठ के फिर दौड़े. So starting with Eshwari, can you share your experience briefly, that what has worked for your company and what did not work?
Thanks, Sanjeeb. Good afternoon, everyone. We have seen tremendous progress in the term insurance market in the last, say, 10 to 15 years. Prior to 2010 or so, insurance product was mainly a savings product with some element of protection. Somewhere around 2010-11, pure protection started gaining traction, mainly sold through the online mode. Financially aware customers bought insurance products online, the products which were priced cheaply or say reasonably. And this is how the journey started. You had aggregator platforms which gave information of different products across the companies with comparison of premium rates, underwriting requirements, etc. This increased the awareness, and the sales of high sum assured pure protection products started growing. We also had existing customers, not only new customers, who now wanted to increase the cover because the cost of living, standard of living was increasing. They felt that the earlier insurance taken was inadequate, and they also started buying more insurance. So what happened in this journey is that along with this awareness, we also had some good developments in the products, like you had the range of protection products from pure protection to return of premium. You had flexibility in the premium payment modes. You had flexibility in paying the premiums either by single premium or limited premium or throughout the policy term. You had options like critical illness, accidental death benefit, etc. All these helped increase the awareness and the business started growing. We also had reinsurance protection in terms of the reinsurers providing expertise in the product design, the features, the pricing, and also taking a significant portion of the risk on their books. And initially when this product category got introduced, most of the customers were, as I mentioned, financially aware customers based in the metros or top cities. They themselves sought to buy insurance. There's a good quality self-disclosures. And hence the expectation that this will be the cream of the insurance population buying on their own, and hence the experience will be quite good, was seen. Early experience was very much in line with the expectation. And based on this, the insurers and the reinsurers got a lot of confidence and they started expanding. And the expansion happened into wider geographies. With expansion, this segment started getting so much attention that the premium rates started going down. There was pressure on relaxing the underwriting requirements because as you went deeper into India, the financial documentations were not available. The demonstration of the need for insurance was not so clear. And things started going in a very wrong direction. As we expanded, probably we should have taken account of the diversity. See, India is not one India. We have many Bharats in it. So not accounting for the diversity, not accounting for the fact that there are differences in the mortality, the persistency, experience, etc., was not appropriate. And to add to it, the insurance premiums were going down. And probably here is what happened is that, what happened here was the most important, not necessarily important, but something that took the direction or the journey in a different way. The experience that started emerging was very much away from the expectation. And then COVID happened. Things got further and further adverse. Reinsurers started to become wary of this market because the experience was very much different from what was expected. It became very, very clear that unless we allow for the difference in the experience that we're expecting from the different micro segments that India has, this business cannot be sustainable. This is long-term business we are writing. The experience has to be in line with what we are pricing. It has to be in line with what the risk assessment of the underwriting is. And hence, what has happened in the last 4-5 years is quite encouraging. The much needed course correction has happened, and now things are much more sustainable. Every company is reflecting all the differences that we need to, or we already aware of, either in the eligibility criteria, or in the pricing, or in the risk assessment. And I feel that now we are at a space where we understand this business as much as we know today, and we are well poised to take it to the next level. The regulator also has been quite encouraging of this category. The capital requirements are much lesser compared to other segments. There is a standard regulator introduced product called Saral Jeevan Bima. The government has also helped improve the awareness and importance of this category by completely waiving of the GST. After the waiver of GST, the increase in term business has been quite significant. And as I see it, it is just going to go into the next space, propelled by all the changes that we should allow for and help navigate so that we reach the goal of insurance for all by 2047.
Thank you. Thanks, Eshwari ji. Sanjay, do you want to add something on what did work well or what did not work well? That's more important to know that what did not work well, and we learned from our mistakes.
Sure. Thank you, Sanjeeb. Thank you for inviting me for this prestigious session. Um, see, we've been instrumental in driving the term business since 2015, 2016. And as Eshwari mentioned, a lot of mistakes done, a lot of good things that have happened across. From a pure ops and tech perspective, if you look at it, a term insurance product is a product which has too much of friction into it. It's not easy to issue a term product, right? From a form filling to a medicals to going across to a diagnostic center or somebody coming and visiting you, plus then you're giving financial documentations to to prove your worthiness. And therefore, what has been instrumental for us in driving our volumes up is in terms of how can we be be more agile, understand what the consumer really wants, make it as frictionless as possible. And therefore, how do we use technology at scale? How do we use third-party data at scale so that we understand the consumer profile and try to eliminate the need of documents, the need of medicals, so that you really make the onboarding and issuance process much more smoother. Now, obviously, when you do that, there is a lot of possibility of anti-selection fraudsters coming in and so on. So I think that's where our experiences were not so good. But working along with the actual community, the risk experts and so on, how do we look at A/E experience at a micro level, at a profile, at a segment, at a geography, at a distributor level, and then fine-tuning our eligibility norms, fine-tuning our underwriting norms, basis the education profile and so on and so forth, and being nimble-footed and agile. I remember working with our actual folks every 15 days to a month, looking at our A/E and seeing what is going wrong and how can we fix it, going as granular as possible. So what has worked well for us, use technology, use data at scale. Obviously, GenAI is here to come. We'll see how does it progresses. Continuous monitoring of our experiences and building it back into your processes and underwriting has really helped us to scale our business in a profitable way.
Thanks, Sanjay. Udbhav, do you want to add any point further on this subject? What worked, what did not work?
So I think Eshwari covered and painted a beautiful picture of how it has been over the last 14 years or so. I think I would just use the opportunity to maybe put in context some statistics of what has worked well and not worked well. So the pricing and the learnings of portfolio, I think aside, at a macro level, how well have we done in terms of term insurance? So we do a study because unless until we quantify, we don't know whether we are making progress. So we do a study which we call India Protection Quotient. And there, if it has been running for 7 years now. And from where we started in 2019 to where we are in 2025, I think we have as an industry made fantastic strides in terms of overall awareness of the category. So on a scale of 100, 0 to 100, term insurance awareness today stands from that study, which comprises 25 cities. It stands at around 74. So that's actually a journey which is perhaps started from around 40. Now, that part has worked well. What hasn't worked well actually is the second level, which is the ownership. So the ownership still lags at less than half of the awareness. So an ownership is around 35. So that's what we are measuring in terms of how we are doing. So I think that's where things haven't really progressed that much. But as Eshwari said, I think with the learnings at hand, I think last 3-4 years we have found perhaps the balance which any complicated life insurance category needs. So we have learned the actuarial control cycle perhaps much better. So in a way, we are better poised to look at what's ahead.
Okay, thanks. Hope all your companies are making money from the term insurance business. Now, moving to the next point. We know that a lot of activities happening. We are making probably a lot of efforts in growing this segment faster and faster. But still, the protection gap is huge. And the opportunity is really big in India because we are country of youngsters, we are country of workers, and protection is basically key. So I'll just share with you some numbers to understand what is the current picture we have, despite companies are going 30, 40, 50, 60% in term assurance in terms of sum assured. So we have the population of more than 140 crores, which is soon, maybe in few years we will be 1.5 billion population, 150 crores. Out of which more than 900 million is the working population. So out of 900 million or 90 crores, even if we see that 20% of this population which is working and can afford buying term assurance. So this amount comes to around 180 to 200 million workers, which is 20 crores or so. Out of 20 crores, anyone who has the meaningful amount of cover, meaningful means at least five times of your annual income you should have, if not 10, 15, 20 times. So I tried to get some information based on my discussions with the industry leaders. So my guesstimate is we have hardly 3 crore term assurance policies, 2.5 to 3 crore term assurance policies, which are there in the market. And so you can imagine that even if we cover 20% of the working population, which is 20 crores, only 3 crore customers are covered. So around 16, 17 crore still open. So this is the size of the market where the customers are willing to buy, can afford to buy, and not all of them are sick. So it's not that you can't issue them the cover. Even if we see that 80%, 90% are fit. So that is again, there is a huge population of fit population. Probably you can issue standard policies. They can afford to pay premium. So the market size is big, the opportunity is big, but we are not able to reach. Even, let me share with you that probably the opportunity is much bigger further. So I have seen some data. So based on that, more than 1 crore new employees are adding as per the EPFO data. And there are many self-employed personnel, so those who start their own businesses. So probably 2.5 to 3 crore new workers coming each year. So in this 17 to 20 crore population, probably 2-3 crores you are adding each year. And how many term assurance policy, term assurance policy with meaningful sum assured. How many we are issuing? It's hardly, I think, 2 crores per annum. So if we continue to do the business the way we are doing, I don't think we will be able to reduce the gap. So the protection gap was there when this industry got privatized. We worked hard for the last 25 years. Still the protection gap is more or less similar. Rather, in terms of amount, it has increased. And if we keep doing the way we work, it will further increase. So we have to basically learn to weigh the new ways, how we can tape this market, because we can't double the underwriters. We can't double the actuaries to price. So what we need to use probably the tools available in the market. Technology is the solution basically these days. If you want to grow in size, technology is a solution. So I think I have tried to make a case of what is the problem statement. And the problem statement is really the opportunity and really our country doesn't have the cover and we are moving to Viksit Bharat, then having cover is basically necessary for that. This is for life. It's for health and PLC, that's again the similar problem is there. So Sanjay, starting with that side, this time Sanjay, uh, can you see from your experience that how this problem can be solved in next 10 years? So if we start from today, in next year, can we reduce this gap? And probably to reduce this gap, we have to double or triple the new business volume. I am talking of just sum assured above 20 crores. We are not touching the low sum assured in this session.
Sure. So the way I look at it, there is two ways to solve it. One is from a pricing perspective. I'll let Eshwari answer that. But from an enablement perspective and, how do we enable faster, better issuance
Closer to the mic closer.
Yeah, how do we enable issuance of our policies, make life easier for our underwriter as well as the consumer? I think one is looking at in terms of how can we make our products, innovate in our products and get more and more wellness into it. I think the current youth who want to buy an insurance product, they are looking at much more of instant gratification. Can I move away from a pure death story to a wellness story? Participate in their wellness activities, give them instant rewards and so on, so that people can hook up to insurance, pure term insurance, and actually move ahead and buy policies which are long-term in nature, buy large sum assured policies, get more and more recurring benefits on a yearly basis rather than looking at benefits only if something happens to that consumer. So I think how do we innovate on the product side is going to be the key for us. The second is in terms of how can we look at underwriting. I think traditional underwriting requiring a draw for blood going on a TMT has to move out from there. How can we use a photograph for a 30 seconds or a 1 minute? There are a lot of technologies coming up right now. And I can tell you since the last, we've been experimenting it for the last 4 years. Technologies which I had seen in 2021 immediately post-COVID, and now what we are seeing, there is a sea change of improvement. Post-COVID, when we took a video of a customer of a 1 minute, the accuracy levels around gender, cardiac risk parameters and all that stuff would be in the range around about 70, 75. Today's technologies coming in is upward of 90. Now using 90, can we underwrite a consumer and issue a policy? Is something that the risk community, the actual community and the underwriters need to work together. So how do we use such technologies is going to be the question. So that we don't need to go back to a consumer asking him for a medical test. Technologies are improving. Second is, there are cases where you will still require, if you're writing 50 crores and 100 crores worth of cover, you still need certain medicals to be done. Now, how can technologies help to simplify the work of an underwriter and able to issue them consistently and give a decision which is consistent and accurate is something that we need to work on in terms of automating our back end. So this takes care of the medical portion. The last portion is in terms of how do we manage the financial aspects, because at the end of the day, the impact of medicals is for the first 3 years. After that, medical nullifies actually from a risk perspective. And hence, how can we financially underwrite the consumer by looking at his patterns of income, his patterns of expenditure online, where does he shop for, how much does he shop for, get his income estimates and livelihood estimates so that we can actually predict the worthiness of the consumer rather than asking documents. Yeah, you have the India stack, you have account aggregator and so on, and the bureau scores. But are we using them in the true way? The answer is not yet. We have been able to reach a certain way. So simplify the financial bottlenecks, simplify the medical bottlenecks, so that we bring these products in a consumer-friendly way and actually take up the volumes much higher.
Just a follow-up question for you. So there are, particularly I think, many companies who have the pockets to invest, and particularly the AI technology, algorithm, and the lot of data available in the market. So how do you foresee in the next 2-3 years, it can help increasing the term insurance volume for companies?
See, technology is continuously evolving, and if insurers don't adopt it, they will soon get outplaced in the market. There are some companies right now, new age companies, who are building their entire stack technology-driven, less with people. So the sooner we adopt to it, it's going to be good for us. Erstwhile, we had seen straight pass purely in savings products. But of late, we have seen straight pass where cases get issued on term business without a medical underwriter going through it. And it is just a fraction, it's just the tip of the iceberg. It's going to evolve much more faster than what we can actually think. Post-COVID, everyone started looking at tele and video MER, right? Where a doctor is there sitting on a call asking reflexive questions. But let me tell you, in a year, you'll see companies moving across to a tele or a video MER being done by a bot. No need for a doctor sitting out there, still asking the same old reflexive questions, getting the responses, and giving a decision instantaneously, not requiring for a medical underwriter to sit and give a decision. So the way to look at this is technology is evolving. It will continue to evolve at a much faster pace than what we have seen in the last 5 years. If one does not adopt to it, the insurer will be outplaced. Faster issuance, instant issuance on the term business will also actually help us to grow our volumes and reach out to more and more people, is the way I look at it.
Coming to Eshwari ji, so in your view, particularly, what are the risk appetite issues or capital issues if you foresee in the next 2-3 years? If these technology guys, they are providing the solution to keep generating the volumes through AI tools or other mediums. So what are the financial issues you foresee may come up in the next 2-3 years, and what could be the potential solution?
So based on the statistics that you shared, Sanjeeb, what we are looking at is scaling up this business by at least 10 times. So does the industry, do the companies have the risk appetite? And when I refer to risk appetite, I refer to two different things. One is, as we all keep talking about, underwriting, medicals, video medicals, financial documentation, which is very important because that is ensuring that the lives that you are insuring at inception is in line with the profile that you want to insure, and it's in line with the pricing, the product characteristics, as well as the underwriting. They all go hand in hand. We can't have them in isolation. So when Sanjay talks about some kind of underwriting, the actuaries and the pricing team needs to ensure that that is taken into account. The pricing, as I said, cannot be done in a silo. But what is also important is that what is also important is what is the inherent mortality experience of the customer segments. We all know that we are writing very long-term contracts. The minimum policy term could be 30. It could go up to 45, 50. We are insuring lives not like earlier 60, 65 years. We are insuring them up to 80 years, 85 years. Now, what is the experience going to be of this segment over such a long period of time, where no one can predict what are the changes that are going to happen, what are the technology advancements, what is going to be the increase or access to healthcare that is going to be there, what is the mortality improvement that we should factor in, should allow for a 1 in 100 year or sometimes 1 in a 10-year pandemic that may happen. So it's a very complex situation. So we can't obviously solve for it at one go, but what is very, very important is that actuaries should continuously keep updating the risk models, the pricing, to take account of any information or any knowledge or experience that we're seeing. As I mentioned in the previous discussion, over the last 10 to 15 years, we have got some experience. But even this experience, which is catering to only maybe 8-10% of the insurable population, shows such a wide variation in the experience, and our ability to understand each of these parameters is still evolving or is still limited. We traditionally use parameters like, say, age, gender, smoker, non-smoker, whether I medically underwrote or not, and maybe some other parameters to understand the experience. But the correlation is much, much larger and much, much diverse than this. How do we rule out random correlations? How do we ensure that all the overlapping parameters, all the interactions, because as I said, if you're writing long-term contracts, you'll have persistency, mortality, everything having an interplay. How do we allow for this in pricing is a very big challenge. So one thing which probably could help is that currently we are required to have guaranteed premium rates for the entire term, if the regulator could look at allowing reviewability of rates after certain years, say 10 years or so, and the reviewability could be at a portfolio level, not at an individual level, that could help us experiment with some of these things, because we know that we are taking a calculated risk and for a shorter duration. So that is one thing that can be looked at. Yes, the financial implications of something going wrong is huge, but even if everything is properly priced for, the capital requirements are going to be much onerous. So what is the help we can get in terms of the reinsurers supporting some of the requirements, how we can look at transitioning to risk-based capital, so that if the company is allowing for all the risks in a very calculated and in a very accurate manner, then the requirements come down. So these are the things which can probably help improve the capacity of the industry. And if we are writing sustainable business which will generate some profits, that profit itself should accrue to the company to help invest further and further. So that should give the confidence to scale it up further.
Okay, I'm sure that regulator will be keen to hear, and they will be keen to support also. Particularly, this is the priority of the government also, how we can reduce the protection gap in the country. So I'm sure regulator will be very keen to work on the problem wherever the support is required from the regulator side. On particularly the risk appetite side, so there is a huge capacity in terms of reinsurance. So there are many reinsurers in the market, and particularly we brokers can help a lot in bringing a lot of reinsurers to support on this initiative. And some reinsurers are sitting here, so I'm sure they are also hearing what kind of opportunity we have here. So it's not that 20 crore customers are there, not everyone is sick. Out of 20 crores, at least 19.5 crores are fit, healthy lives, right? So it's a good business opportunity in the business sense. Udbhav, so in your view, the problem you know, so how do you see the solution for the problem?
So, the growing protection is, of course, a complicated balancing act. So I think the operational part and the risk management part, I think Sanjay and Eshwari commented on. But looking at it at a very, very basic level, let's say when I look at my field force, like, is the pricing, product innovation, or let's say the underwriting or capital still the only constraint which we are dealing with? Like, why is it not growing? I mentioned awareness is growing. Why is ownership not growing? Now, at a very, very basic economics level, from a salesperson's perspective, it really comes down to nothing to do with the product on its own or the underwriting, while they are important and have their nuances. The real crux of the problem actually goes down to the basic productivity of our sales force, right? So if with the education or the skills which, let's say, a standard salesperson on the ground has, if the ability of that person to produce on a monthly basis is, let's say, at max 2 or 3 closures. Now the basic economics of how the cost structures of the company would be, you would naturally tend to get the higher ticket sizes into the business. Actually, that is, in essence, really the constraint of why, let's say, with our best efforts, we are still hovering at an industry level, let's say 6-7% of our premiums being term insurance. I'm not sure if the limitations are causing it to stay at that level. So the technology problem which you mentioned, I think technology has impact not only on, let's say, better risk selection, better risk pricing, or let's say video medical, etc., photoplethysmography. I think all that has a role to play, but at the foremost, I think technology has a role to make our sales force more productive. I think that use case of making the first level salesperson, the first level supervisor, better equipped to have, let's say, more pointed closures, more pointed nudges, I think all that element of technology in a way is directly related to growing term insurance. Actually, that is just because if you can, instead of 2, let's say produce 5, I'm just putting it out there, then maybe your sales targets or the basic economics is met by the first 3 policies, which can be, let's say, 1.5 lakh type of a ULIP or a policy. You are done with your basic production quota. Then the demand, which is otherwise on term insurance, the seller is not compromising going for that because you can only generate 30,000 or 40,000. So in that sense, it's a basic economics question, and technology has a role to play in that simple, beyond the technical part of underwriting and capital management or risk management. So that's how I would say.
So if I can add for this thing, I think a very valid point raised by Udbhav. How can you increase the productivity from 2 to 5? But the other element what can evaluate is, even if you're selling for those 5 cases, how do you increase the cover amount? Consumers, sellers would typically go for a 1 crore, 2 crore cover and max out and come. How can we actually do a better need analysis and say, hey sir, you are worth 10 crores, why are you going only for a 1 crore or 2 crore? So increase the protection amount as well. And that's where technology can come into play in terms of getting the right sum assured for the consumer, which can actually help us to widen the protection gap as well.
I think just one point coming to mind, we have to automate fully, at least for certain segments of customers. For example, the case is registered. So there are many cases where you guys are doing the video medical business. Through bots powered by AI, immediately the customer can actually go to the medical stage. The moment he is submitting, the medical can be done, and if everything is okay, probably the policy can be issued. So the customer journey can be in minutes. So that's very much possible, and we have to find out many such innovative ways that people are not required in this journey. So, and you know that in India, through technology, you can multiply volume. It's not 10, 20, 30%. You can do 1,000%. That means 10 times you can do in a year. That's possible. I know we have to start slowly. After learning, we have to do it. But at least in the next 2, 3 years, we have to reach to that stage. That end-to-end technology should help actually selection of lives and issuing the policy, if not for everyone, at least for healthier and those who have the affordability to pay. So now the time is only 4 minutes left, so let's take a couple of questions. Any question? Everyone is hungry. Huh?
Hello, sir.
Yes.
My name is Suman Pahari. I am working with SBI Life. I want to thank the panelists for the very insightful sessions on term insurance, and this topic is really very relevant in today's time, powering India's journey to Viksit Bharat. And India will be developed when everybody will be empowered. Okay. And we have seen post-COVID, there is a significant increase in awareness of insurance. However, being in this industry, we still struggle to provide solutions where there is a need for, and customer wants insurance, but we are not able to provide solution. Before a few months, I received a call from one of my friend. He says one of the vegetable vendor, his earning is handsome, he's earning good, and he wants to buy a term insurance of 1 crore. And unfortunately, he approached to most of the insurance companies. However, everybody has said no. I mean, our underwriting policy doesn't allow us to provide insurance to vegetable vendors.
Okay, got it.
Yeah.
So, Udbhav, can you answer that? So, he's a vegetable vendor. You know that it's informal type of employment, but he can afford 1 crore of cover in terms of affordability and the need.
Yeah, I think very, very relatable articulation of the problem which we have right now in the industry. So the issue, I think, is related to how the market has also evolved. So it's not that that person doesn't have an insurable interest or the life cannot be insured. Now, the situation we are in as an industry is that we haven't really still come to terms with defining the segmented pricing strategy, if I really were to put it that way. Because the way the market, the way the let's say, overall marketing of life insurance has progressed, the pricing is, to be honest, I think we have a lot of technical people aware of the experience, etc. here. It's still quite thin, actually. So the challenge is not that we cannot insure that person. The challenge is if the person or the distributor involved has the expectation to insure that person at the same price. And I think the journey, Sanjeev, which you mentioned, to growing to the next 10x, to some extent has to go through this tough realization that there cannot be a standard price, and we're trying to expand right from a MNC worker to a vegetable vendor. So I think that realization will also come. We have matured in many aspects. I think that will also happen. Geographical expansion, profile expansion will come along, and hopefully we will have a retail solution to that customer also in future.
Thanks, Suman, for raising a genuine problem for which really the solution is required. So this is not one vegetable vendor. There are millions of such people who have genuine need, but still we are not providing the solution to them.
Just want to add a point there. So, Udbhav, should we wait for the customers to understand that there needs to be a difference in the pricing, or we as insurance companies take the first step? Because we as insurance companies probably should take the first step, because the customer probably is not so aware of all the nitty-gritties of pricing, etc. So if we start having that reflected, because we have been speaking about the difference in the customer segments, the difference in the way we source the lives, the way we underwrite, if we start reflecting that in the pricing, which will be the appropriate price for that segment and which will make it sustainable and we can grow, the acceptance probably will start coming through, because currently we have built the expectation that term insurance is always going to come at a lower price, but that's not necessary. Even at a certain price, term insurance still gives a good insurance protection, because the cover could be still 200 times, 300 times, which is very valuable for that vegetable vendor. So why should we not make the first step is a question we need to ask ourselves.
I think particularly in India, there are many vegetable vendors. You see the UPI code. That means there are a lot of cash coming from the UPI. You need to make a assumption what percentage is coming through UPI, what percentage is coming as a cash. UPI is going to their account, and it's easier to estimate what could be their income from that. And that way you can probably see the income and how much insurance he could be eligible for. And without getting any kind of financial evidence, it's possible to issue business to them. Only you need to have their bank account number and bank account statement. Yeah. So any other question? Last question.
Yeah. Just a follow-on question to what the other speaker had mentioned. India has a good percentage of younger population, and there is a gig economy that is coming into place where one person takes up multiple different types of jobs. So I wanted to understand from Madam Eshwari and others in the panel whether there are products that are coming into place for such segment where one person take multiple jobs and overall they have a capability to pay the premium. And the other question was, Mr. Sanjay had mentioned about adverse selection and experiences around that. Are you looking at any technology interventions for fraud prevention in term insurance market? By the way, I am Lalita Krishnan from Infosys, sir.
Quickly, Sanjay and Eshwari, if you can answer quickly,
Yeah.
30 seconds.
Yeah, so yes, the point is we are looking at technology solutions to mitigate fraud at the time of onboarding as well as at the time of claims, right from a video match to a face lip syncing to understanding in terms of what the consumer is actually, understanding his profile online and should he be covered, should he not be covered. Looking at databases from IIB to other fintech players and so on. So the point is every insurer The maturity is different, but everyone is looking at either building in technologies or looking at third-party data to fight fraud at new business as well as at claim stage. The point on products for people who are into multiple jobs, I think there are products which are available. It's all about underwriting guidelines. There are underwriting guidelines which cover employees who are basically gig workers having multiple jobs. And for the vegetable vendor as well, you can send that customer to Tata AI. We are more than happy to insure him because we do so. Our underwriting guidelines are based on profile which cover all these things. So the point is more than product, it's an underwriting guidelines the way I look at it.
Yeah, just to add, see, we are not necessarily only going to be categorizing the consumers as self-employed, vegetable vendor, or gig workers. We look at them in a holistic manner. And as long as we have all the information needed to be able to assess the risk of that customer and give them an appropriate price and a product, I think everyone is welcome. And we would want to ensure more and more such people because that's the only way we can cover Bharat or India by whatever timelines we have. So that's the only way to go. We can't have a very straight-jacketed approach or a very linear approach. The underwriting guidelines we're talking about are quite archaic. We need to evolve with time, and AI has got all the tools, all the data sets available. It's the best time to make use of all this and get into a zone where we are comfortable ensuring more and more such lives.
Thank you. Thank to all three of you for taking time for us and sharing your views. Thank you very much.
Thank you so much to our esteemed panel members and our moderator.